What is up, everybody? Welcome to the Anomaly course. Now, this course will be recorded similar to my YouTube. We're going over core content lesson one, candle profiling. Now, there are two functions to candle profiling. That is how a candle forms, right? The open, low, high close, or open, high, low close, and the wick size. So, firstly, let's cover all the different candle types and how they form. And then we'll cover wick size and why wick size actually matters. So, first, let's go over open, low, high close, or a bullish expansion candle. So how does a bullish expansion candle form, right? It opens low first, forms its wick early on in the candle's lifespan, which is what actually allows the candle to expand, create that large body, and close near its own high, right? Open, low, high, close. This would be the higher time frame expansion candle and the lower time frame that makes up the higher time frame expansion candle. Now let's get into the bearish expansion candle. This is when we open high first, expand away, and close near its own low. So here we are on the hourly time frame. This is depicting a daily candle. So as you can see, the day more so consolidates, right? So what we want to see really is an open low first, like a retracement to then make its low. So here's the open, the low, and then the expansion away from the low of that candle, and then the close, right? But it doesn't have to just open low. It can also just consolidates. But the first real move, right? The manipulation, that's what we're going to be viewing as the low, for example, right? So as you can see, we kind of consolidate here. We're not viewing that as an open high or an open low. It's neutral, right? The first manipulation is what we're viewing as the low, right? If we manipulate the high, that would be an open high, right? If we manipulate the high first, that would be viewed as an open high. But as you can see, consolidate, we manipulate, we expand away. Once that low is in, we should, create the high and then ultimately the close. And here is that daily expansion candle. As you can see, forms its wick very early on the candle, which allows that candle to expand and close near its own high. So here we are on the hourly chart. Here we're going to be depicting an open, high, low close daily candle. So as you can see, how does this day form? It opens high, trades into a key level. Once we react off that key level, that's where we expect the low, which is the expansion away from the high, and the close. So when we look at that daily candle, as you can see, it forms its high very early on in the candle, which allows it to expand and close near its own low. So next here, we're going to be covering reversal candles. There are two types of reversal candles. There are reversal to expansion candles and regular reversal candles. There's a big difference, and really it has to do with the wick size, right? But just like an expansion candle or any candle, any bullish candle, you want it to do what? Open low first, expand away, close into highs. It's that simple. So now a bearish reversal into expansion candle will look like this. It'll open high, reverse, expand away, and close off, just like a bearish expansion candle. It's essentially the same thing. So here we are on the daily chart. We're going to be covering this specific daily reversal candle. So as you can see, we trade into the previous candle's low. We have that small wick. That small wick allows price to expand, right? It forms the wick early on in the candle, so there's a lot of time to expand, which creates that large body, right? So when we drop down to lower time frame, what do we see? How do we want these bullish candles to form? Pretty simple, right? That's really what we're really going over in this section specifically. We want it to do what? Really simple, right? Open low first, expand away after putting in a low, and then we want to continue, right, to make that high, and then it's going to close off. So now here we are for a bearish reversal to expansion candle. As you can see, price opens up, trades into the previous candle's high, which is typically how you're going to see reversal into expansion candles form. They typically reverse off the previous candle's high or low. So dropping down to see the formation of how this candle actually forms. What does it do? How do we want a bearish candle to form? Pretty simple, right? We want to open high into a key level, expand away to form the open low, and then close off. Really, really simple stuff, guys. Now we're going to be covering the second type of a reversal candle, and that is where we have a large wick, right? But nothing changes, right? We still want these bullish reversal candles, bullish reversals expansion candles, bullish expansion candles, all to form the same exact way. The way we want this to form is we want to open low, just like any bullish candle. The only difference is it puts in its low very late in the candle, which doesn't allow for price to expand beyond the open, which leads to a very unpredictable close. So how does a bearish reversal candle form? Essentially the same thing, right? It opens high first, puts in a high, expands back towards the open, and closes. So here we are with a bullish reversal example. Now the key to trading a reversal candle is you need to hit a key level. So as you can see, price over here hits a key level, because once price hits a key level, that's when we can actually anticipate a reversal candle forming. The next step is how it is actually forming, right? We want this candle to open low into the key level. That way we can trade back to the open. So here we are on the hourly time frame, and let's look at the developments of this bullish daily reversal candle. So I can see price opens low first, prints a reversal, and expands back towards the open. This is essentially exactly how we want to see reversal candles develop. So now let's cover a bearish daily reversal candle. We need to hit a key level. So let's check if we have hit a key level, right? Yes, we have. Way over here to the left, we have hit these highs. We've clearly manipulated them. Now, what's important about this candle specifically is that large wick. So in order to trade this, what do we need? A bearish reversal development on the lower time frame. So let's go check that out. So here we are on the hourly time frame. And how did this candle form, right? It opens high first, doesn't even leave a wick. This is like the best thing to see. If 1800 is low day or there's no wick, that is absolutely perfect to trade back to this opening price in order to trade a reversal candle. It's really ideal. So this is exactly what we see here, right? Open high, puts in a reversal. We expand back into the range, making that open low, and then we're closing it off. So now let's go over a negative condition, and that is where we have a seek and destroy profile. There is neither a defined open low or open high within the candle profile. It will lack direction and follow through to a specific side of the market. So here we are on the daily time frame, and as you can see, we have this very, very small range day. Now let's go see why that is. So as you guys can see, when we drop down to the hourly time frame, there is absolutely no defined direction within the candle profile. We start off by opening high, then low, expanding away, but can't follow through the current high of day. We reverse off that. We come back to the current low of day. We can't follow through there. We come back to the current high of day. We can't follow through there, etc., etc. This is what happens within a seek and destroy profile. It's a type of consolidation, and it is absolutely a negative condition that we want to avoid. So now let's cover wick size. We're going to be covering expansion candles and reversal candles. What do they have in common? So expansion candles, which is what we want to ideally trade, have small wicks. Go into any time frame, any market. What do all expansion candles have in common? Is a small wick. So we can really use this to our advantage to filter out price so that we can only be on side with expansion candles. So now what do reversal candles have in common? This very, very large wick, right? Which is ideally not what we want to trade because we want to catch large ranges, large expansions. We typically want to avoid trading these large candles, except on the daily and the weekly time frame. Anything else we typically want to avoid. So why does wick size matter? It essentially filters out expansion candles versus reversal candles, obviously, right? But it's really for determining targets, right? When you have an expansion candle, you can expect further targets to get hit where as you can see here, price reverses early on in the day, forming that small wick. So we know that this candle has the possibility or the opportunity to actually turn into an expansion candle. So these targets that are far away from the opening price, they actually are permissible, right? We can actually target them and have a fair chance at that. But when we have a reversal candle with a large wick, it doesn't mean we can't trade it. We just know that these farther targets away from the opening price cannot get hit because price is going to have a very hard time expanding beyond the opening price, right? Because look how far price expanded away from the opening, right? That is not a small opposing run. That is a large opposing run. So what you're going to target when trading the weekly and the daily, specifically the daily, because you're going to be trading this quite a bit if you so choose to. What you're really going to be targeting is ideally anything from the opening price to the reversal. So anything internal to that in your max TPs are going to be the daily open and anything just beyond the daily open, right? Anything beyond this point, anything beyond the daily open is not guaranteed, right? Especially if price expands extremely far away from the opening price, even the daily open is not guaranteed. So really your most guaranteed area to target is like a gap maybe within the current day's range, maybe a relevant low in the current day's range, which is going to be in the premium end when you mark it from the opening price to that reversal candle to the reversal, really in that premium end. So here we are on the daily chart. We're going to be studying wick size for reversal candles. So a really easy trick to understand the difference between anticipating a reversal into expansion candle versus a reversal candle is simply where the daily is actually opening near. So as you can see, this daily open is actually opening near a key level, right? You need a key level to be hit in order to anticipate a reversal. So if that daily open is opening near a key level, then it has the opportunity to form that small wick because the daily open is positioned near the key level. Does that make sense? So look at here. Where is this daily open opening near? This high right here, right? Which is a key level. So if it's opening near it, then that would allow the candle to form a small wick and actually expand. Notice that these candles are more so expanding. The bulk of the whole candle is made up of a body, right? Not wick. So that is ideally how we want to trade reversal candles. Now let's zoom in over here, right? We essentially have the same thing where we have a key level being hit, but what is the difference between this candle is the opening price is really, really far away from this key level. So it doesn't mean you can't trade it, but you need to adjust your targets if you're within this reversal profile. So here we are on the daily chart. We're going to be covering expansion candles. And again, what do expansion candles have in common is a small wick. As you can see, even these bearish expansion candles, what do they all have in common? A small wick. Doesn't matter what time frame you use, you will see the same thing over and over and over. This acts as a filter for us to get on side with, to trade that body or that expansion to catch these large ranges. So here we are on the lower time frame. This is going to be depicting an expansion candle. And once we have an expansion candle with that small wick, what does that mean? We're expecting this candle to expand and close to the highs. So this means we can expect further targets to get hit, right? Our higher time frame targets, we can actually expect to get hit, which is what we will obviously be targeting. And price can even expand beyond these levels, right? Into levels just beyond there. So here we are on the hourly time frame, and this is depicting a reversal candle. So like I said, it is never a guarantee that we're going to get to the daily open or the current high of day when we expand very, very largely away from the opening price. So what you can do is you can mark out the current high of day, the current low of day once price puts in that low, and you can target back within the premium end. Even better if you can find a target in the lower end. Obviously, that's even better. But as you can see, we entered this high right in equilibrium. That is a perfect area to TP. As you can see, once price starts to reach up in that premium area, it's going to be hard to even get back here, right? If the wick is not so large, we can reach back to the daily open, but it's going to have a really hard time getting beyond it. We have no idea where this candle is going to close. Unlike an expansion candle, we can pretty much anticipate it should close near its own high.